Okay, awesome. So thank you everyone for being here and everyone that could make it. This is an AMA. So is it possible that I can get a brief introduction from you guys?
Yeah, sure. Okay, you guys want me to start things off?
Oh, yeah,
So
sure.
we, okay, so yeah, we are Visor Finance. We are an active liquidity manager on Uniswap V3, and what we do is we manage price ranges on Uniswap V3, which is a concentrated liquidity AMM, and we set the ranges. We set the ranges, manage price ranges based on volatility. And more recently, we signed on with Perp's liquidity management program, where we will be providing liquidity on Perp V2. And and in terms of my background, I am a community manager and I'm in charge of business development at Visor Finance. And happy to be here.
Awesome. Does anyone else from the team want to introduce themselves? Maybe XYK and Saganaki?
Sure, yeah. So I previously was at Maker, and this was during the MCD launch. And then after MCD launched, started to look at some other categories within DeFi, non-lending protocols, and really went down this path of discretionary asset management and liquidity provisioning as a new category within DeFi, and so we're helping to chart that with Visor.
Awesome. And lastly, Saganaki?
You're on mute. I don't know. Okay. Well, we can go to the next question, I guess.
Yeah, oh, good. So I guess my next question would be, what are the benefits of providing liquidity to Visor versus like doing it yourself when it comes to Uni V3?
So when
Yeah, I guess
Uniswap, maybe I'll go first, and then
sure.
you can add. Okay. So when Uniswap came out with their design schematics for Uniswap V3, that's when we sort of realized that there was this opportunity to provide a solution for a problem that was created. And that problem was having to maintain a range, a price range for liquidity, whereas before you didn't have to do that. And so the maintaining of this range, unfortunately, was in the most gas cost intensive way, which is minting an NFT. And then if you want to change your range, or the liquidity, the price goes out of range, you have to withdraw the liquidity from that NFT LP position, and then you have to mint a new one. So there's a time consideration here, and there's a cost consideration to being an LP on Uniswap V3. And so that allows for a solution like us to step in and be a manager on a DeFi user's behalf or an LP's behalf. And so primarily it is just time and cost consideration. Then there's also the applying a strategy towards providing liquidity on a pair, and so that's the third difference. And so that the strategy, a strategy can't really be implemented in the NFT LP framework, just because it's mostly manual, and there's not there are great price oracles, but there's not a simple way to define algorithmically your strategy within the existing Uniswap tooling. So what you can do with Visor is provide a strategy, and we've created an endpoint that allows somebody to set many variables, and then you can add an additional element of price prediction, or this discretionary ability to look at the next interval for the strategy and provide what you think is going to be the optimal liquidity range.
Yeah, awesome. That definitely covers basically everything that I think you really need to know. And so sort of my next question now is, what sort of strategies does Visor Finance employ, and like what needs to happen for you guys to change strategies that you currently are using?
Mm-hmm. Okay, I'll let Saganaki answer this one. Okay, so maybe I'll take that. So the strategy or the strategies right now on mainnet are different from the strategies on Arbitrum, and so the biggest consideration when deploying a strategy on Uniswap v3 in a position is gas costs, because if you make a strategy without the gas cost consideration, you can have the best strategy, meaning short interval time, and very fine tune, the thresholds for rebalance, do constant fee accrual and reinvestment of those fees, in short intervals. But if you have the gas costs, which right now to rebalance, it's about $1,000 in gas costs, and so the strategy right now has been on mainnet, because our treasury is subsidizing those gas costs. The strategy is to not rebalance too frequently, but to provide the price range that would be over the next day. So we typically do 24 hours until the next rebalance on mainnet, and that is based upon a moving average, and something that's called Bollinger Bands, which allows you to set a standard deviation and that moving average in order to set for the next interval once you rebalance. But there are many other strategies that we have worked on, and Gamma has worked on, which is our research entity, and creates simulations, and we have a dedicated GitHub repo for our new strategies that we're working on, and that adds an element of price prediction, and allows for an aggressive rebalancing, and so those will emerge on Arbitrum and Optimism. But yeah, right now it's sort of these basic strategies on mainnet because of the gas considerations.
Yeah, that definitely makes sense, especially with Ethereum mainnet being so gas intensive and the fees are so high. So you talked briefly about Gamma Strategies. Could you guys explain a little bit more about what Gamma Strategies does? Because out of all the other Uni v3 sort of market making protocols, you're the only one that I've sort of seen with this sort of dedicated data scientist sort of foundation that you guys have set up.
Yeah. So what we wanted to do initially was only have Visor be the protocol that's permissionless and decentralized, and anybody can create what's called a hypervisor, which is a position manager contract for any pair, and keep that the protocol separate from any discretionary asset management decisions. And so that when we decided to relegate the protocol to only the technology and not the management, that's when we knew that we had to create a dedicated entity that focuses on research and development of strategies, and then therefore can provide the strategy that either the protocol selects or individual users select, and so that's why we created these two separate entities. Then when you look at Gamma and what it provides, what the protocol and I guess what the solution that we're providing in DeFi is a new type of return generating category within DeFi, because right now or before us there were basically two primitives to get yield in DeFi. The first one was lending protocols, like Maker and DYDX and Compound and Aave, and you're putting in these assets, you're getting a positive yield by lending them out, and huge category in DeFi. And then there's a second one, which is the hyper issuance of new assets, and that's what Yearn focuses on, and can be termed as yield farming. But the yield is dependent upon the hyper issuance of these new assets and new protocols and airdrops and farming, but they're non-discretionary. Meaning there isn't, you put in an asset, you're getting a positive yield back. It's not based upon there's not based upon price prediction or speculation or anything that in traditional finance is classified as discretionary asset management. So in order to, if you're going to provide this in DeFi, the discretionary aspect, you need to sort of look at traditional finance and the strategies that exist there, rather than looking internally into DeFi. So this entity Gamma allows for us to attract outside talent that comes from traditional finance, and these strategists have quant backgrounds and can integrate price prediction into DeFi, because that's what they do in equities and other asset realms in traditional finance. So Gamma is focused on onboarding those strategists that don't have to interface with contracts and Solidity, but can interface with an endpoint that anybody with a good liquidity providing strategy, which is to say, choosing a accurate price range for the next interval of the strategy, can do that. And so Gamma is tasked with creating this active management strategy framework, in addition to creating that endpoint that soon anybody can provide a strategy, and then the protocol would implement a strategy fee that goes towards those strategists.
Awesome. That's definitely something that's very interesting and sort of different that you guys are implementing over at Visor. So I just wanted to ask about what sort of strategy will you guys be using for Perpetual protocol, and how have you had to tweak sort of the normal strategy you guys have been using?
Can you guys hear me now?
Yes.
Yep.
Okay, great. Sorry about that. So the thing is that in the end, the perp pool that we're probably going to focus on first is an ETH USDC pool. And it's just that your synthetic tokens allow people to get maybe leverage or actually be short. But actually, in the end, from an LP perspective, it is just a ETH USDC pool. So we think that our typical strategies are going to work really well. But however, we're going to be looking to consider that part that a lot of the LPs could be levered or could be short. But we look at making sure that the strategy is within range, the maximum amount of time possible, so that fees are earned, that risk is managed, and that is managed by the width of the ranges. And we have some statistical models that kind of guide those decisions. We've built an active strategy framework that we use to backtest these strategies continuously, and make sure that we're optimizing the parameters for the strategies that we've built. And also we have, as part of Gamma, like this grant program where we have, like Miles was saying, XYK was saying earlier, have new potential strategies being developed with machine learning tools, with different kind of more advanced statistical features. But our base models are still going to be bread and butter, because that's what's been proven to work in traditional finance, and are very, very, very standard tools that allow you to perform simulations, that there's a lot of historical academic research on how they work, where the potential pitfalls. And so we think that in general, those kind of strategies are going to work well, but we're definitely going to pay attention to the particulars of per protocols LPs.
Awesome. And so like now I just wanted to quickly move on to like the next question, which is like, for these LPs, what are the risks for using Visor Finance?
So in terms of liquidity positions, the main risks that an LP is exposed to are what it's called in the industry impermanent loss, and that is the potential underperformance of having the LP position rather than having the assets outright. As you're an LP, people are trading against you. So if ETH goes up, it means that people traded ETH out of the pool and gave you, for example, USDC. And it could be the case that as ETH is going up, you're actually selling it, and you could end up having less ETH and it's more valuable. And so the way that we mitigate that is to make sure that enough fees are accrued to make up for that impermanent loss. And so, and further, that when there is a lot of volatility that we expect that the price is going to shoot up, we widen those ranges a lot. And so you're selling your ETH a lot less aggressively, and that way you end up incurring less impermanent loss because you sold less ETH. And so that's kind of the main risk mitigation strategy, is making sure that the ranges are reasonable and that your risk is mitigated by not having such basically what's called a very levered position.
Awesome. Yeah, that definitely sounds very it seems like very peace of mind for some LPs to sort of mitigate those risks. So what are some of the main differences between Visor and its competitors?
Well, from the technology side, what we have, what we built before Uniswap came out with their design schematics for Uniswap v3 was a technology stack that was oriented towards the discretionary asset management category of DeFi. And what that means is that there's some layering here. So the first thing that is the core of Visor is these NFT smart vaults, and this allows the user to deposit assets into and then permission to another protocol or liquidity venue, but then also to that what's called the supervisor, which is the manager. So there's this vault that also allows for gasless transactions. It allows for in the case of liquidity mining, it allows for not having to lose custody of your assets. You can subscribe to a reward contract that pays your vault without you having to risk any of your assets. Whereas liquidity mining previously or anywhere else is done by taking your LP tokens and depositing them into somebody else's smart contract. So you lose custody. So the technology here is a big differentiator, especially as we begin to create more complex situations or available options for LPs like liquidity mining. So you have the vault as the first layer. Then you have the hypervisor, which is the smart contract that is the asset routing to and from the protocols, and then you have that supervisor, which is the owner or is permissioned to have admin controls of the underlying contract, and that's where the rebalancing takes place. So that stack is a huge differentiator from anybody that wants to do discretionary asset management in DeFi, because we've created this scalable infrastructure in order to have many. The user has one vault. There's many liquidity venues to choose from. Then there's many managers to choose from, and at any time, you can withdraw or unsubscribe, and so that whole infrastructure is a huge difference, because alternatively, you have to do a urine style vault, which is you have basically one option: deposit or withdraw into somebody else's smart contract. So that's on the technology side, how we're different. Then on the strategy side, how we're different, I would just go back to the whole reason why we set up Gamma, which is to allow real quant strategy creators in traditional finance to be able to take their strategies and implement them on Visor, no matter what liquidity venue in the future, and therefore compete with the commodity that is return on investment or return on the underlying assets.
Yeah, I guess I would just to add on to that, just like as a very tangible example, what we don't do is we don't swap to get into position. And as Saganaki was mentioning earlier, as the prices moves up in range, you're more in USDC as opposed to ETH. And when you rebalance positions, we don't necessarily swap that USDC for ETH to get into the new position. What we'll do is we'll maintain a base order and a limit order. And when you set limit orders, like that doesn't incur that 0.3% swap fee. And I know some other competitors of ours, they'll swap to get into position, but what we found through backtesting is incurring that swap fee tends to hurt profitability over the long run. And for that reason, we heavily make use of the limit and one-sided range orders to avoid that swap.
Awesome. Yeah, that's definitely a huge differentiator between like some of the other competitors in the Uni v3 market making space. So I just wanted to ask about like a new product you guys are launching, which is Visor Phantom. So what is Visor Phantom?
So Visor Phantom was emerged out of constant demand from DeFi projects and inbounds to create either custom management or custom strategies, and then also the liquidity mining requests. When we first created this protocol, it was for DeFi participants, and we thought, we're going to offer a lot of opportunities to DeFi participants, but we didn't anticipate the amount of interest from other DeFi projects, and so it made sense to look at defining what those use cases are for other DeFi projects, and then creating a framework based on that, and sort of like a schedule on what we can do, and creating some customized contracts that can be used with other projects. So the other difference, the reason why we created Phantom is because there's really one main strategy that Gamma employs for DeFi participants, and that strategy is highest rate of return, and includes the mitigation of impermanent loss in order to get the highest rate of return on the assets provisioned. And that is not what projects are looking for. That's a DeFi participant desire. But with projects, it's not so much looking for a rate of return. It's looking to minimize slippage for their pair, establishing limit positions so that you're able to sort of keep liquidity within a range no matter the slippage. It's to create or allow for a liquidity mining program, and incentivizing their token holders to come in and provide liquidity. So it's an entirely different strategy, and so establishing Phantom allows us to sort of map out the architecture of what we're providing additionally, not just for DeFi participants.
Yeah, I 100% agree with what XYK just said. And from a business development front, what I've been seeing is a lot of interest in our Visor Phantom product for projects to be able to manage their own liquidity on Uniswap v3. So we provide a liquidity management service for these protocols. And I think what we're seeing in DeFi today is that there's sort of this paradigm shift where, before, as XYK was mentioning earlier, there's this hyper issuance of assets in order to maintain sufficient liquidity. Whereas, if I want to incentivize liquidity for Perp and ETH on UV2 or Sushi, a lot of times it'll involve emitting a lot of Perp rewards continuously. And a lot of these liquidity providers are mercenary. And when those liquidity rewards dry up, they remove their liquidity. And so a lot of other protocols, I think we've seen like Tokamak and Olympus, they're trying to find ways to for protocols to source this liquidity a lot cheaper in a more sustainable way. And where Visor fits into that picture is we're the active managers on Uniswap v3, which has a multitude of benefits for a protocol that wants to manage its own liquidity. Number one is the capital efficiency of Uniswap v3 is 3 to 10 times greater than it is on v2 or any other constant product AMM. So let's say if you needed 2 million of liquidity in perpetuity, that number could be as low as 200,000 to 700,000 on Uni v3 due to its capital efficiency. And not only that, with Uni v3, you're making higher yields due to the concentrated liquidity nature of the AMM. So it's for a project to be able to not just more cheaply manage their liquidity, but also be able to generate yield so that their liquidity stockpile grows over time. So for that reason, we've seen a lot of interest in our Visor Phantom product. It's just a cheaper way for a project to source liquidity. And even if they wanted to do liquidity mining on Uni v3, it's often a lot cheaper than if they were to do liquidity mining on v2. Purely due to the concentrated liquidity nature, you don't need as much liquidity as you did before.
Yeah, definitely. That definitely makes a lot of sense, and I can definitely see that there's a lot of growing interest in that sort of product. People just want in DeFi. So the next question would be, what does the Visor token do, and what sort of utility does it have?
Yeah, so our token is it's a governance token, number one, where eventually when we fully decentralize, all the holders of Visor will be able to vote on strategies, and our end goal is to make it so that anybody can create a strategy, and the Visor token is pivotal in terms of governance for that. And what a lot of people are interested in also is our token. If you stake our Visor token, you are 10% of the LP fees burned on Uniswap will be directed to our Visor stakers. So it's number one, it's governance, and number two, it's a revenue token where they're entitled to 10% of our protocol.
Nice. Yeah, that's definitely very, very cool. It's definitely a lot of fees like I've seen on your website. It's quite a lot of revenue sort of distributed to Visor token holders or stakers. And so what sort of returns can someone expect from being a liquidity provider on your liquidity provider vaults?
Yeah, I guess that's sort of a complex question because it's really a function of a few variables. When we look for certain pairs, we look for high volume, low TVL pairs on Uniswap v3, and those pairs tend to have the highest APRs. So like we have a do now with dashboard where we're constantly surveying new pairs, and that's pretty much our main metric, whatever has highest fees over TVL. And so those are two of the main things that we look for. We also look at price correlation because extreme price divergence in the assets can cause greater impermanent loss. And the more the assets are correlated, the less impermanent loss can be suffered. So for non-correlated pairs, we tend to set a wider range in order to not incur as much impermanent loss. But for more correlated pairs, let's say like ETH and TrueBit, which historically has been very correlated, we can set tighter ranges and earn a higher fee multiple. So the types of APRs that you can see can range anywhere between 20% to 30% to for the higher volume pairs like OHM, ETH, I think it could range the highs 700s to maybe even 1,000 at times. So it's really dependent on the trading volume, the TVL, and the price divergence.
Yeah, awesome. 700% to 1,000%. That's like really, really insane returns. And yeah, definitely could see how those factors come into play. And a sort of a last question that I have at least is, what sort of pairs will be available to provide liquidity for upon the launch with Perp v2?
Saganaki, you want to take that?
I think you might be having mic issues. I think what we decided first is we would decide with ETH USDC is probably going to be our first pair, and also BTC USDC is another pair that we're considering. And we'll probably start with those and then go from there. Just kind of curious, Andrea, what pairs would be initially starting off with? I know you guys have maybe a permissionless market creation model. Just curious there, what do you guys envision as the first few pairs?
So I definitely think we'll be starting with what we already have on V1. And then when it comes to permissionless markets, that's going to be sort of later down the road in the Perp V2 roadmap. So that won't be like available upon launch for our initial V2, but definitely something that would be later down the road.
Got it. Yeah, I think our ETH USDC pair, we're already managing that pair, so it would be a very easy transition to go into that pair. And we definitely look at the other pairs, especially look at their volume, their TL, and based on those factors, we'll enter those pools, as we see fit.
Yeah, that definitely makes a lot of sense. So that's all from the questions from me. So if anyone from the audience wants to either like raise their hand so they can come on stage and talk, or you can ask questions in the AMA questions section, and we just want to get some extra questions from the audience. Hey, Lee.
Hey, sorry, I kind of joined by mistake, but I do have something I want to say.
Sure.
Can you hear me?
Yeah, we can all hear you.
Yeah.
Yeah, great. Yeah, first of all, Visor guys, thanks a lot for coming on. It's really great talking to you and hearing what you have to say. I just want to make one little comment about what pairs we'll have available. I think when V2 launches, it's pretty likely that we will only have like maybe just ETH and BTC initially, and then quickly start adding more pairs. I'm not exactly sure, but I wouldn't expect to launch with all of the pairs that we have now. I would sort of expect it to be like a rolling start where we start with 2 pairs and then quickly add the other ones. But that's sort of to be confirmed, like it hasn't been confirmed yet. I just wanted to add that in.
Okay, awesome. Yeah. But I think we can definitely work with that. I mean, you guys have been great with sharing documentation and getting the whole integration set up. So that makes sense in terms of discovery on what pairs need to be added. I know that there's a little bit of a discrepancy when switching networks. Arbitrom, the volume does not really track on mainnet, and there are some different pairs listed and different volumes, and sometimes sole volumes on Arbitrum that are not on Uniswap, or Uniswap on mainnet. So it makes sense to take it as it goes.
Yeah, for sure. Well, our BD people will continue working with you really closely. Like, obviously, you're pretty essential to our V2 strategy. So, yeah, really looking forward to that.
Great, thanks, Lee.
Also, a quick question. When do you guys expect to launch your Perp V2 product?
Yeah, that's the $1 million question. We don't have a date. Basically, we are in the second round of audits right now. And so depending on the results of those audits, like if the auditors find no problems and they're like, wow, this is amazing, then we could launch pretty soon. But if they do find some problems, which I mean is pretty normal, it'll depend on how long it'll take to fix those. And so it could be anywhere from like a month to 2 months. Like, we really don't know.
Yeah, makes sense.
Yeah, for sure. If you Visor guys have any questions for Perp, let us know. And let's open the floor up to anyone else who wants to ask questions.
Yeah, thanks for clarifying. Thanks, Lee. Sorry about that.
It's all good. It's hard to keep track. Like, actually, Perp is a fairly complex project. I think there's probably nobody who knows like everything that's going on at once, except for maybe the 2 co-founders. Like, there's a lot of moving parts, and that's one reason people say like, "Oh, you're so slow at launching" or whatever. And like, actually, Perp is a pretty complex thing to set up. Like, you'll notice that like nobody forked us, or if they did fork us, like it didn't really take off. It's actually pretty difficult to do. So these things take time, and we have a lot of really smart people working on it. So looking really confident.
Yeah. So like, if anyone else wants to just ask a question, just like raise your hand or just type it in the AMA questions channel, which should be above the Perp stage. If you guys have any other questions for, the Visor Finance team or just even Perpetual Protocol.
Hey, can you guys hear me?
Yes. Yep.
Hi. Just thanks for that, guys. Just had a quick query. If you can give any insight on the product side of things. You mentioned about the Bollinger Band strategy for V2 and optimizing for gas costs, and that being different on Arbitrum. How will that actually work when how will that actually work when if you want to change strategies on V2? I suppose, yeah, just some insight on that product side of things. Would you actually go into the UI on Visor and sort of select different strategies, or is there some other process?
So
do
right
you mean
now,
while our
yeah.
strategy is live, or by Visor offering different strategies for potential perp participants, LPs?
Yeah, I suppose if you just take the FUSD example, if it starts with the Bollinger Band strategy that you have now, what would be the experience to select a different strategy? How does that actually happen from the LP's point of view?
So it's a one-to-one relationship right now, meaning any pair runs one strategy, and the one-to-many, where you're now selecting a new strategy, is yet to be deployed. So I mean, and that would basically be, it would switch the sequence so that you're selecting a strategy and then you're selecting to LP into a position that is subscribed to that particular strategy. So right now the sequence is selecting pair. That pair has a supervisor or a strategy associated with it. If we were when we offer multiple strategies on the same pair, it would be selecting the strategy and then selecting that the pairs that are offered under that strategy. So, but on Arbitrum, the strategy is going to be different than the mainnet strategy, because those the gas cost considerations are much lower, and we have defined that strategy. It's called an auto-regressive strategy, and so when we go live on Arbitrum, we've already deployed on there, but we haven't seen enough volume to publicly list those pairs to LP into. But when we do, they'll all be on that second strategy, which is basically it adds a lot more variability. It's more dynamic because we can rebalance, and we can invest the accrued fees. We can more finely tune the threshold that triggers a rebalance. But that when that is deployed, that will be entirely different from the mainnet strategy.
That's right. And basically, given that we access our strategies through an endpoint, if it is the case that we decide that we are no longer going to use, let's say, that Bollinger Band strategy that we mentioned earlier, we would notify our LPs, but they don't have to unstake and restake. Basically, we set strategy through an endpoint and not on-chain, and that's because of different considerations, security, maximal extractable value, and many others.
Cool. Thanks for that. That sounds great. Cheers, guys.
Thanks.
Thank you.
Yeah, so we have a question from the AMA section from Sinsacato, and it's just simply, is there a Visor Discord or Telegram?
Yes, absolutely. We've got 3,000 members in our Telegram, and that can be, all these links can be found at visor.finance, but the URL to that is t.me/visorfinance, and we have a Discord with about the same amount, several thousand members, and all active. We have great admins on both of those. Happy to answer your questions 24/7 there.
Yeah, I can post in that channel. I'll post more relevant as well. Now.
Yeah, awesome. And so now we have a next question, which is from Shogun, which is thoughts on how Visor will compete against Popsicle Finance in the next quarter.
Well, so we're dedicated engineering-wise to deploying on L2, which to us can be defined as Arbitrum and Optimism, and so when we're deployed there, we are then able to list many more pairs than we have now. Right now, we're managing 24 pairs, and sort of stalled at that number because of the gas cost considerations. And so and also just focusing on Phantom and L2 deployments. So when we get to this next phase, which will be within the next couple of weeks, where we're fully deployed on L2 and listing new pairs there, that is when we'll grow TVL and be able to offer pair management on most of the top 100 pairs, and then go into some other edge cases like low TVL, low volume, high volatility pairs that are very interesting. But we'll make that announcement when that comes out. But that's sort of our trajectory. I don't know the trajectory of other projects, but that is at least speaking towards variables that we control and a trajectory of TVL.
Right. From the business development front, we're constantly looking to partner with other protocols and integrate them into our system of managing their liquidity, and we're getting a lot of interest in that area. And if you really think about what I mentioned earlier about our token, it's 10% of the protocol fees are directed to the token holders and the token stakers. A lot of our tokens value is a function of our TVL. So how can our TVL improve over time? It's really integrating with as many protocols as possible and having, so that's on one end, and another end, it's having the best strategy. And we've really put a lot of effort into developing these strategies. Saganaki is coming up with strategies all the time and looking to hedge impermanent loss. And we have, if you look at our Gamma, I posted some Gamma strategies links earlier. If you look at our Medium articles there, we're constantly looking at new ways to hedge impermanent loss, and we're really focused on this strategy endpoint. And I think that's going to be a key differentiator going forward.
Awesome. Yeah, so also we just have a clarification from Lee, who's asked, does Visor have auto compounding of earnings?
Yes. So there's a function that is called, and it's called collect, and that's much more frequent than a rebalance. So that takes the accrued fees that are outside the position and enters them right back into the position. And if it's at a different ratio because the position changed, then it will place excess assets into a limit position until that ratio of that single asset meets the same ratio as the base position, and then that will be entered into the base position. So that there is an auto reinvestment of fees. It's just what interval are we talking about? So a lot more frequent than rebalances, but not every minute.
Yeah, thank you. That definitely makes a lot of sense. So if anyone else has any questions from the audience, just make sure to either put it in the AMA section or just sort of raise your hand if you can.
I don't seem to be able to raise my hand, but so I'll just speak directly. Sorry. I have one question, which is on Perpetual Protocol v2, the makers, aka LPs, will be able to use leverage on their liquidity provision. And I'm wondering if this leveraged LP has any implications for Visor strategies, or if that complicates it in any way, or if you have any other comments about that.
So in principle, from the perspective of the Uni V3 pool, you're just supplying basically, instead of USDC and ETH, you're supplying VUSDC and VETH. So in the same way that we're ready to manage a 100 million TVL, the fact that the LPs themselves are levered shouldn't make that much of a difference, because in the end, all what matters is that you're capturing the relative price of the two tokens, that you are tracking it well, that you're mitigating the risk of divergence. So from our initial analysis, given the documentation that you guys have shared and what we have seen from other Perpetual systems out there, it doesn't seem that we need to be apply a very different strategy, but we're definitely going to be on the lookout in case there are some particulars because of the fact that the LPs are levered.
Okay, awesome. I have a little follow-up to that. So because the LPs are using leverage, there is the potential for liquidation. Now, in theory, you can just set the price range that you're in to be within the bounds of like it'll be above the liquidation point for longs or below the liquidation point for shorts. And I'm wondering if Visor will take that into account. Like if I'm an LP and I have like a 5x position, can I be sure that the Visor strategy will be placed at a price range that avoids the liquidation price?
Yeah, absolutely.
So-
We'll be taking all those factors into account, in terms of setting closing orders and rebalances. So, we don't get liquidated. That's like something that we're definitely.
Saganaki, did you want to say something?
Saganaki, did you have something you wanted to add to that?
Yeah. So one thing is that one of the things that the ways that we can basically save on gas on mainnet is because we pool all of the LPs together, whereas on Arbitrum we do not. So we really need to. So this is going to be some of the things that we're going to be working on in the integration, whether or not there could be some user-specific LP situations where we take into account their liquidation price for sure. And so this is part of the integration work that we're going to be doing on the next couple of months, working closely with the Perp team, our core devs, because of the benefits that Arbitrum brings to the LP problem.
Awesome, thanks.
Yeah, thank you. So we have another question from the audience, from Sinsacato. It says, you mentioned limit orders when discussing mitigating the negative impacts of rebalancing, and he just wants to clarify, are you referring to setting single tick LP positions to essentially capture the swap fee rather than paying it?
Yes, now that's not, it's not single tick. It's dependent upon the amount of assets that we're placing into a limit position. But it does allow us to not have to pay that swap fee and capture fees at the same time.
Thank you. Thank you for that. Yes. So if anyone else just has any questions, I don't think raising the hand seems to be a bit of an issue right now with the AMA. So if you can, just sort of ask the questions in the Discord channel if you have any more questions from the audience.
All right, I'll just butt in again with another question. Sorry. I'm curious, maybe you mentioned this already and I just missed it. Sorry about that. Have you guys already launched on Arbitrum? Like, are you running, are you running on Arbitrum Uniswap v3 yet?
Yes, so we have deployed to Arbitrum. There are a few contract changes that we have made because of the economic arbitrage possibilities for a single-sided asset deposit when entering into a LP position, and so there are those changes, and we're documenting those. We're going through a audit process right now specifically for our L2 contracts. We're announcing that tomorrow with the auditor. So that is just kind of like you guys. That's the biggest consideration here with our next phase of our launch. But yeah, we're all geared up and ready to go and on L2.
All right, sounds awesome. Have you guys done any comparison of the gas costs on L2 Arbitrum compared to mainnet? Because I know you were mentioning before that gas costs are basically like a major factor for strategies on mainnet.
Right. So when Arbitrum came out, when Optimism came out, we did a comparison and we wrote up an entire Medium post just going through the simulations, and I'll post that below. But it is obviously significantly lower, and we've also sort of made it a thesis to not consider gas costs for the next strategy, just to see in a low gas cost or no gas cost environment, or where our treasury is taking on full subsidy, what will the strategy look like? So I'll go ahead and post that now.
Yeah, the headline number was a 92% reduction in cost, which is ridiculous.
Wow, awesome. And I guess is that considering like Optimism, I guess actually both Optimism and Arbitrum right now are sort of in like a test mode where like transactions per second are still limited, which causes the gas cost in theory to be a little bit higher than we could expect sort of long term. Does that 90% reduction take that into account, or is that just like directly looking at the current performance?
That was at the time right after Optimism launch. So yeah, so in terms of the long-term potential, it's a lower end estimate for sure.
Wow, awesome.
Yeah, that's definitely a huge reduction in fees from mainnet compared to from Arbitrom compared to mainnet. That's pretty crazy and insane. So just make sure, like, from the audience, just ask it in the AMA questions section, because the I don't think so raising hand functionality currently works right now.
Yes. So that's why we are so bullish as Visor in terms of going all in on Arbitrum. It will allow us to manage our goal is to manage hundreds of pairs in an automated way with high risk reward balance that DLPs can do as best as they can, while also offering our Visor Phantom solution for DAOs and other protocols that need more fine-grained management of their positions.
Yeah, that definitely makes sense. If we don't have any more questions, Lee?
Sorry, I always have more questions. And maybe other people have questions. Definitely just put them in the AMA questions channel. Can you guys talk a little more about your overall audit strategy? Like what's your process for that?
So there's two ways we've approached this. One is the economic arbitrage audit strategy, where and I'll just explain that is when someone, I guess you could say a bad actor, would come in and deposit purely one side of the pair, and before it's deposited into the main position, is able to alter the price oracle on Uniswap, and of course there's some capital requirements for that, and so that's where the arbitrage comes in, and then be able to exit the position if we were entirely in the other asset. So it's a little bit of a sequencing game, and this is why we have got the current caps the way that we do. But it's not an exploit. It's not a smart contract exploit issue. It's just looking at the considerations around, if somebody had enough capital to alter an oracle, would it be economically beneficial for them to go through with that transaction? And so that's why the output of that audit will be establishing a global cap and a user individual transaction cap. And so right now our global cap is no more than 20% of the TVL in a pair on Uniswap. So our position will not be greater than 20% of the entire TVL of the pair. And then individual deposits it's a progressive cap. So as the TVL of our position rises, then so does the individual cap. So it's just creating an entire strategy around not being able to be gamed economically. And then our second way that we're handling audits is just the traditional smart contract exploit audit, and so that is we've got two separate groups working on those, and we'll announce the auditor tomorrow for the smart contract exploit audit, and specifically our L2 contracts.
Cool. All right. So it sounds like from your first point there that maybe assets with like low liquidity would be a little bit risky. Like if it's a low liquidity asset, then the oracle price may be easier to move for an attacker. So do you have some consideration of like minimum liquidity availability for a certain asset that you're going to list?
Yes, we've enforced those considerations for the listed pairs now, but we don't. You don't have to take those considerations you don't have to put those considerations into effect if you are mitigating that technically And so that's something that we added additionally to our L2 contracts is being able to create whitelists. So only whitelisted LPs can deposit. And then also, this one's more significant, but enforcing the ratio of the pair so that we can turn on and off the ability to deposit single side assets. So when we're looking at managing these low TVL, high volatility, price volatility pairs, that will be used a whole lot more. The enforcing of the ratio, so that removes the ability for the economic arbitrage.
Okay, cool. Yeah, thanks for the explanation. So it sounds like this, like for this whitelisting and other sort of numbers you're talking about, like ratio, are these things set by the team, the core team, or do you have like a governance plan that will be able to set these types of numbers?
We do have a governance plan, and it's necessary. Having a DAO that sets these contract parameters, and can select a strategy fee that can go to the strategists, is very important for us. And so when we complete the audit for L2 deployments for our position manager contract, that's what we view as sort of this end state of the contract, but the variables change. So the framework end state. Now, I mean that we can have governance vote on a new position manager contract, but what we're focusing on now is what are those parameters that need to be set, and how are we setting up a governance process that allows for the fairness there, the time delay, all the considerations on governance we're working through right now.
All right, awesome, thanks. I'll open the floor to other people. Anyone who has questions, just go ahead and ask them in the AMA questions channel.
No, thanks, Lee. I love your questions. If you got any more, we've got another hour.
You're too kind.
I guess I have another question. Not sure if you guys have any plans on this, but do you guys have any plans on sort of deploying onto like EVM sort of compatible like L1s, such as like Avalanche, or is that something that's definitely not on your roadmap?
Well, I mean, so we're dependent upon another protocol. Obviously, that protocol being Uniswap v3. At the moment, we're dependent upon that protocol as a liquidity venue. So we sort of are going where Uniswap is going, and they're dictating the engineering path, or the network path, I guess you could say. So if Uniswap v3 or even Sushi with their Trident concentrated liquidity abilities, then we'll look at that. But right now, because the main protocol that was deployed first on Optimism and Arbitrom was Uniswap v3, then that sort of sets our path.
Yeah, and I guess I would add on to that. Just we're looking at discretionary liquidity providing, and other AMMs are sort of coming in with their own models where you can adjust the way that you provide liquidity, not just kind of do a uni v2 or Sushi style liquidity providing, like Sushi Trident's one of them. There's Dodo Shell Protocol where you can really find alpha by providing liquidity off the way. And so we're really kind of looking at those liquidity venues as well, and to the extent that they're on other L1s, like I know Sushi's on a bunch of different L1s. So long as those protocols are there, then there's always a potential for Visor as well.
Yeah, thank you for that. Oh, that's definitely very exciting. Like, I didn't even know that you guys could sort of build on top of like Sushi Trident. That's something that I was going to ask next. So that's very exciting as well.
Yeah, and we don't know. I mean, the Trident may launch without concentrated liquidity is sort of what we're hearing, meaning in phase 1 or at the start, but their concentrated liquidity is very, very similar to Uniswap v3. So it allows for our contracts, or most likely will allow for our contracts to interface with their version of concentrated liquidity.
Yeah, awesome. Yeah, so anyone else has any questions, just definitely make sure to pop them in the AMA questions section. Yeah, and if not, then I think this sort of like wraps up the... Oh, got another question. So we have another AMA question from Sinsacato, and he's asked, if you're dependent on another protocol for now, are there concrete plans for another type of discretionary management offering from Visor?
Yes, great question. So, like I said before, we created Visor as a discretionary asset management protocol before Uniswap released Uniswap v3. So we looked at many different ways to offer discretionary asset management as well as those venues. So a very simple addition to Uniswap or concentrated liquidity management would be sort of like a lending rate swap, and being able to use stablecoin assets and get the best rate by having a manager that deploys the stablecoins into the lending protocols based upon that rate. So that's just a simple a simple example of how we could offer something else. But I wouldn't say that we're dependent on another protocol as being a negative. Like you could say that that Uniswap is dependent upon Ethereum, and Ethereum is dependent upon these protocols. Sort of it's like this nested nested dependency. So yes, I mean, we're dependent upon the protocol at this time, but we're offering a solution where that protocol is not offering the tooling around what needs to be created. But there are many different ways. There are many different assets. There are many different liquidity venues that we will immediately start to look at as soon as we feel comfortable with what we've provided for concentrated liquidity provisioning. Then we'll go on to other discretionary asset management solutions.
Uniswap, provides a lot of volume in itself. So I think there's just plenty of opportunity there, and even Perp V2 will also be on Uniswap V3. There's various simple lending protocols. I know Euler is also much on Uniswap V3. So I think as other protocols utilize the Uniswap SDK, build on top of that creates a lot of opportunities for us as well. And it's I don't think it's even been fully explored yet. So as soon as new use cases come out for Uniswap V3, we'll be keeping an eye out for new opportunities.
Yeah, thank you for that. That's definitely very cool, and it's very exciting for the future of Visor. So yeah, if anyone else has any questions that maybe just joined, just pop them in the AMA questions section. Yeah, and if not, I think that definitely can conclude the AMA session. Thank you all for coming around, and definitely special thank you to the Visor team for coming out and answering all the questions that we had and our audience had.
Of course, yeah. Thank you guys.
Yeah.
Thanks for giving us an opportunity to explain everything about Visor. I know it's complex, kind of like what you guys have built, but being able to explain it, and the nuances around it is great. So thank you.
Yeah, definitely a special thank you from me as well, because I've been following Visor Finance ever since you guys sort of had a website and started a Twitter and started the LBP.
Awesome.
So it's been really fun to sort of follow you guys' journey and see how you guys have progressed over time.
Great, thanks. That means a lot.
Yeah, so thank you guys from the audience for coming out, and yeah, definitely special thank you to the Visor team, and really excited for our partnership and see what happens in the future. Definitely very excited.
Likewise, yeah. Thanks for having us, Lawrence. It was great to be here.
Yeah, thank you guys.
Thanks. Bye.
Thanks, guys.
Bye.
Bye-bye.
Thanks a lot.
Thank you.
Thank you.